There's Miss Shannon. And maybe a few other people popping in. Good morning, Shannon. Okay, I'm going to go ahead and get started. So, I need a reminder every time to share my screen. Hold on. Okay, so we're going to get started on all things agent financials today, which I know is definitely the scarier part of our business, but it's also, I think, the part of our business we don't necessarily talk about enough. I love to share this because I want to share all of my failures. I definitely have had a lot of failures around this. I'm going to share with you just some of the stories and the things that I have done to fail forward so you can learn and not do what I did. But I would say my first couple years in real estate, my tax returns were negative, so I didn't have to worry about taxes, but I also was not making money. So I didn't have to really worry about a profit and loss statement. But as I grew my business and as I became more successful, and I think the blessing is you can come into this business right now, the way the market is, and actually be pretty successful pretty quickly. I had to really learn to start understanding how to operate a business, how to save money throughout the year for my taxes. What do my expenses need to look like, whether I was an individual agent or growing a team, in order to truly stay profitable? And I think what we oftentimes don't realize is most of us don't come from an entrepreneur background. And then we start into real estate as entrepreneurs, as business people, and we really don't understand expenses. We don't understand what our profits should look like. We don't know how to protect our money. We don't know how to play red light, green light. And we don't even take into consideration until we make a massive amount of money, just how many taxes we potentially could owe at the end of the year. So my doomsday was the year that I got married. We were getting ready to get married. We got married May 30th. And that year I had end up making like $300,000. My business was somewhat, a great business at that time. But I didn't really pay attention to it. Right. I was just selling houses and just making the money, but also just spending the money. And I remember this is before I knew to file extensions or do any of those things. My tax accountant came to me and said, "You owe $55,000. Well, I had spent that entire $55,000 like on my wedding dress, on all the things. And I was like, I'm getting married in 45 days and I owe $55,000 in taxes that I don't have. Like, this is a great way to enter into a marriage. So from that point forward, I realized I could not operate a business like that. And it wasn't fair to my family. It wasn't fair to my husband. It wasn't fair to myself. It left me feeling frantic. It left me feeling like a failure. And, I remember my husband saying, like, you just made all of this money, but you paid it all in taxes. Like, you have zero to show for it. So it made me realize like I needed to stop and pause and start operating myself as a business and start paying attention to my expenses and start knowing how much money I needed to spend in each different segment of my business to grow it. But also to make sure that I stayed profitable, but also didn't cost myself business because I wasn't putting money back into my business as well. So this is going to be like basic entry-level agent financials of sort of what the makeup of your income, expenses, profitability should look like. If anybody wants to dive into it deeper, we definitely can in another day, but this is just very basic, but it's still something I totally live by. So the first thing I wanted to review with you is what's called the MREA budget model. And what this essentially shows you is the breakdown per what your GCI is of what your business income, expenses, and profitability should look like. So what the MREA model says, and this is something that I've followed since I was introduced to it in coming to Keller Williams in 2014, 2015. I even still follow this rule of thumb today, is at these designated GCI levels, your cost of sale is any cost that's incurred after you make a sale. That's your splits, your royalties, any split to your team, any transaction fees that you have on every single transaction. This is not necessarily a cost until a sale occurs. So you'll see at the top what the incremental segmented cost of sales percentages should be, which would be the best practices. And then your gross profit. Your profit, depending upon your level of income, is going to be anywhere between 80 to 50%. A number we constantly strive for is right around 60%, but you'll realize as you grow, that number definitely can change. Expenses, I've always said rule of thumb, I try to operate lean and only have my expenses be 30% of my business. And then my net income anywhere between 50 to 60. But as you grow, it's a smaller percentage, but a larger number. This is just something I wanted to show you guys. If you've never ever seen it before, I would really look in the column that you are sort of in currently. And for this $150,000 column, this would be $150,000, and any 0 to 150,000 should be in this range. That was a question I had originally when I first started at Keller Williams. So just FYI, that's rule of thumb. So what does that mean? So if we were to look at the average ratios, the cost of sales on average should usually be around 30%. And if you look at it as an individual agent, if you're on an 80-20 split, 20% of all of your sales until you cap are probably going back to your brokerage. And then you do have another 10% that's either your office expense, like any true cost of doing business. And then you have your expenses. Your expenses are, what does it take to operate your business? We're going to review expenses here in a moment. I usually keep in my business account 30%. And then your net profit. So if you were to look 30-30, your cost of sale, your expenses, that's 60% of whatever your gross commission income check looks like. Your net profit's 40. But what this does not take into equation is taxes. Your taxes are going to come out off of your net profit. And I'm going to show you what I have done since I was an individual agent till even operating my team now, because at first I didn't do a profit and loss. I didn't feel like I had a big enough business, or I didn't feel like I had enough money to do a P&L. So this is what I did to make sure I stayed true to operating my business in a way that I would operate from a red light, green light naturally. So I can know right now, based upon what I do with my paycheck, if I'm profitable, if I'm not. And if I see that I'm profitable, I can say, hey, we can spend a little bit more money to grow our business. If I can look in my bank account day in and day out and say, hey, we're almost at the break even, we need to hit the red light, I know that instantly. But I think what oftentimes happens is so many of us just put our money into a bank account and spend it, and we're not responsible with it. And that's a very reckless way to live. It's how I lived at one point in time. It gave me a lot of franticness. It made me operate my business from fear. And it truly did not empower me to even know, was I running a profitable business? So doing this little system that I'm about to share with you will tell you at all times, are you profitable? Are you not profitable? So once you receive your paycheck, what I always do, and I'm going to talk about this in detail, is I have a business account. All of the money goes into the business account. I leave 30% of it in there to operate my business. So out of that money that I have left, which is 70% of whatever the money is that came in, I take 40% of that and I put it into my tax savings account, and the additional 60 I put into my personal account. That I do have myself on payroll as well, but that allows me to operate my business day in and day out. I can look at any moment in time and look into my bank account and tell myself, are you profitable or are you not? Do you need to spend money, or do you need to red light yourself for a little bit and put your head down and grind? And if you do that one simple thing as an individual agent or as a growing team, I think you're going to lead and operate your business with a lot more confidence and also a lot more responsibility, to be quite honest with you. And this really plays a part, especially when you start growing. You can look in your business account, if that 30% starts to grow exponentially, but over here in your personal life, you feel like you're drowning, then you probably need to higher leverage. So those moments in time where my business account grows and I start to feel like we're missing a piece of the puzzle on the team is when I go to Mary Carol and say, hey, like, we're missing a person. We need to take this money and hire somebody. So it also, operating your business this way will give you permission to grow, or give you permission to leverage yourself, or give you permission to pour money in marketing dollars. Does that make sense? So here's an example. This is a breakdown. So closing day, let's say my total commission is $5,000. I put 30% of that in my business account. So that's $1,500 I put in my business account. So of that $3,500 I have left, 60% of it goes into my personal account, 40% of it goes into my taxes. These numbers can be different for you based upon what your tax liability is. If you know you're in the highest tax bracket, you need to put in 40%. But if you're only in 20%, then obviously you could put 80% in your personal account and 20% in your tax account. So this is also going to change based upon your tax bracket, and that's something you need to ask your accountant as well. Is anybody doing that currently? Yes. Good. Has anybody not done it and learned the hard way? Feel free to unmute yourselves and chat. No. Gabby, it's nice to meet you, Gabby. You're definitely starting your business the right way from the get-go. If you've already done that for quite a long time, I had to learn the hard way.
I had to learn that the hard way this year.
Yes.
Even though I started with putting money in tax account, I tried to do 20 to 30%, but yeah, it definitely hit me pretty hard this year. So trying to look at all my ways to save as much as I can.
Money. And that's what we're going to talk about next. How many of you, go ahead, Shannon.
I was going to say that's Carmen that's on my team.
Oh yeah. Hello. Your name's Gabby at the bottom. Okay. Give me, everybody, if you could raise your hand or just speak out loud. How many of you are set up as an LLC, taxed as a S Corp?
I'm a LLC.
Okay. Are you set up to be taxed as a S Corp?
I'm not sure since my husband's on it with me.
Okay.
We just set this up like this month.
Okay. So your LLC is essentially your legal setup. Your S Corp is how you would pay taxes.
Oh, okay.
So that is something I would check with your tax accountant. My husband and I are both in all of our LLCs, but we're all set up as S Corps. So I definitely know it could be done if even as a husband and wife.
Okay.
So setting yourself as a S Corp and paying yourself through the business is going to save you $13,500 on $100,000 because you're not going to be paying self-employment tax on the money that you filter through the S Corp. You're only going to be paying self-employment tax on the money that you put into your personal account. Does that make sense?
Mm-hmm.
So there's some tax savings significant, especially once you reach that $100,000 mark, if you were to set yourself up as an S Corp versus just a basic LLC or just as an individual. Shannon, do you have yourself set up as an LLC or an S Corp?
No, and I'm doing that as soon as possible.
Yeah.
That was one of my plans for this year.
Okay. It's a must. It's something I wish I would have done sooner.
We hired an accountant this year to do our taxes because my husband's always done it. And so
awesome. That's amazing. Mary, anybody else set up as an LLC or an S Corp? So essentially what that looks like is every paycheck now through your brokerage is going to be made out to your LLC. All of the money goes to the LLC first. That's where I leave my 30%. The 70% I have left, I put 60% of it in my personal account, and I put 40% of it. And I have my 40%, my tax savings money, instead of paying estimated, I have it into an account that's earning higher interest. So I keep that money all year, and last year I earned like 5 to 6% interest on it. So I'd rather do that versus giving it to the government, but that's personal preference. But I do have my money set aside for my taxes in an interest-bearing account that I earn interest on throughout the year. And it just helps offset your taxes a little bit more, especially the larger that number gets. I got some checked. LLC is on my to-do list. Yep. LLC is a must. Yep. Good, Mary. You're an LLC filed as an S Corp. Awesome. So essentially you can save up, I just skipped ahead. You can save up to 15.3% setting yourself up as an S Corp. So $100,000 income is going to save you $15,300 for just setting this up and filing as an S Corp. So talk to your accountant. The steps are you need to get a tax ID from the federal government, determine your LLC information, file your LLC with the Secretary of State's, set up a bank account, report it to the Real Estate Commission, and start receiving your paychecks through that. So if you're not, just by coming today, hopefully you're going to go save yourself $15,000 next year. So let's talk about expenses. Let's just share, what does everybody have as their largest expense on their P&L statement currently? What do you spend the most money on? Anybody?
Marketing,
Marketing?
client gifts.
Okay. How many of you have your car set up in your business name, or how many of you are paying your car payment, your gas, your insurance through your business?
Yes.
Yes. I'm going to tell you, in doing so, you're really going to have a free car. A lot of people will ask me all the time, why do you get a new car all the time? And it's because I do accelerated depreciation. So if I buy $100,000 car and I depreciate it in 1 year, if you buy a $50,000 car and you depreciate it fully in 1 year, you're going to save about 50% of the value of that car in taxes as a tax credit to offset you. So every year I try to buy a decent car. You know, I don't pay cash for it, I finance it, but you get to do an accelerated depreciation, which saves you an exponential amount of money on your taxes. So if you are guessing or questioning yourself, should I go buy a car? Yes, you should, if you can afford to pay the payment, because you're going to pay yourself back in taxes in doing so. The hard part is in real estate is we don't have physical buildings to write off. We don't have large expenditures. We have like marketing and stuff that's a little bit here and there, but it's not anything significant. You know, so oftentimes if, you know, you can save yourself $10, $25, $50,000 in taxes by going out and buying a car and putting it. I have mine set up in the LLC name. You don't have to, you just have to pay it out of the LLC and use it solely for business, or a majority of the time for business. So other expenses that you would have: business cards, flyers, gifts, marketing, online ads, open house expenses, signage, all of your association fees, lock boxes, any repairs you pay for out of pocket for clients is an expense if you're reducing your commission. Your internet service, telephone, you know, I pay all of my phone bill through the business, my internet through the business, any new computers, any technology, anytime I'm traveling for business, I write that off. If you have to stay at a hotel, airfare, car rentals, all of those are business expenses, correct? As you grow a team and you hire people, essentially, you know, payroll is
Excellent. I'm glad you're here. Yes, sir.
Oh. Essentially, you know, payroll is an expense, but it's an expense that'll also help offset your taxes too somewhat. So that's another way. Oftentimes, you know, you'll look at, I need to hire an admin role that's $35,000 a year, but it's reducing your taxable income. And if you're at a 30 to 40% taxable income bracket, just by hiring that person, that salary is about only 50% of really what it's going to be, because you're offsetting yourself a little bit. What are other ways you guys are saving? What are other things that you're expensing to help you tax liability wise? Is anybody doing any coaching? Going to any seminars?
Yes.
Can I ask a question about the travel?
Yeah.
So what do you guys consider, you know, a business travel expense? Like, is it a seminar you go to and then you can write off everything, including your or is it if you go and have a conversation with somebody?
Yeah. So anytime I'm having a business conversation with somebody about growing the business, not a listing appointment, not a buyer's appointment, maybe those are, I only look at it as anytime I'm growing the business or going to like Raleigh for a seminar or going somewhere for mega camp or for a larger seminar. Those are the travel that I write off.
Okay. So it wouldn't be just if you took your, like if I took my family to Florida and met with an agent down there, had a conversation.
Yeah, girl.
Yeah. What do you have to document?
So one of the tips I always say is I have a business card that I just operate and run everything through, and that's my documentation. And at the end, so how I'm set up is I have an accountant who has access to all of our business accounts, and then we have a credit card too, because we earn points on it that we pay off at the end of every month. So I do all of my photos, all of my travel, all of my expenses on that credit card that I can. And then at the end of every month, he has sent our bank account, so he sees all the itemized income and expenses, and then he also gets a copy of the American Express bill, and he looks at that too. And then if he ever has any questions, he'll say, well, where's this airfare to Florida for? And I just let him know proactively. When I send it to him, I'll tell him, hey, we went to Florida for a seminar this month, yada yada yada. And that's all. He keeps track of all that for us. So if you find yourself an accountant that helps you do all that, it really streamlines the process. And he's not horribly expensive. I only pay him a couple $100 a month to look over all of our expenses for the A-team business. And then at the end of the year, he charges me to file my taxes, but he's already done my bookkeeping all year. So that's not horribly expensive either. For each business, for like the A-team, I think it was like $2,300 for the whole year of bookkeeping and tax filing, which is also an expense. So I look at every expense of what's the time it's giving me back, but what's it really costing me? Because it's offsetting my income. So $2,300 to me, based upon my tax bracket, means he really only cost me $1,200. And that's how you need to start looking at expenses. Don't start looking at them as costs. Look at what's the time it's giving me back, but what's also the true cost after tax to me too.
Thank you.
Yeah, absolutely. Any other expenses you guys would want to share or talk about or question? There's not a lot in real estate's the problem. It's something, I face every year. It's something I've been researching. The only way, if you follow anybody like a Grant Cardone or anybody that's accumulated a massive amount of wealth, the only way to truly offset expenses is by doing any type of investing that you can to defer your money into, that you can either show as depreciation or show as a long-term, it's going to pay you back, so that's going to be like real estate financials 102, because that's the next step. I wanted this to be very entry basic level. And then once you do start to accumulate wealth and do really well with your business, and you only have this minimal amount of expenses, how do you save yourself more money, but also grow wealth, but also helps build your business? That'll be 102. That's
Amber, what about restaurants and out to eat? I hear some agents talk about every time they go out, they put it down because they might have spoken to someone about their real estate or given someone a card. And I'm always I never know about that versus, if you actually were out with a client.
Yeah. I'm going to give my disclosure of I'm not a tax accountant, but I'm just going to tell you what I do. I'm just a firm believer in when you do what's right, good things will happen to you. Stephen or I live out of our businesses, but we have friends that literally swipe every single living expense, every grocery, everything through their business account. If you want to do that, that's fine. I'm not saying that's bad. It's just not something I choose to do. So only when I go out to a restaurant and take the team or meet a client or meet another agent that maybe wants to be on the team, do I use that as an expense, Mary. Otherwise I don't. I think I just think that's not good energy personally.
I agree.
Yeah, it's just not, I don't want to, when I go to bed at night, I want to know that I did everything I could to do what was right, because I know I'll be blessed tenfold for doing so. Sonia, you asked about hair, makeup, beauty items. No, I put all those through my personal account. I don't do any of that through the business account. The only type of personal clothing I ever do through the business account is if it has the A-team on it. And I'm just a little bit of a rule follower with certain things. It doesn't mean you can't. It's, If you were to get audited, would that come up? Probably. I mean, but who knows? It
Yeah,
depends on who's auditing you.
I did ask about it, our tax person this year, and
Yeah.
she's like, it's kind of iffy.
It is iffy because it is.
So I left it off.
Yeah. Our tax accountant always says, is it required as part of the job? You know, if you have a uniform you have to wear, if you're using it for marketing, you know, my husband's things is he has friends that have these exotic cars in their business name. There's always ways around to justify anything. One of our best friends is one of the 15 tax lawyers in all of the US, and we are always asking him questions. And sometimes he'll say, this is in the gray area, and you're probably going to get a slap on the wrist and pay some money. This is a no-go, or this is how you get around it. The tax laws are really written to help you, but I think so many people don't take the time to study them to help yourself. So that's something I would encourage you to do. I have a couple of books I recommend. One is Tax-Free Wealth. That is a great book that'll teach you on certain things to do to help you defer taxes, and or invest your money, or put your child on payroll. Anybody have any children that are working for them? We are going to put Manny on payroll this year because he goes to the warehouse and he helps Steven and he cleans and does things. He's only 5 years old, but literally he's going to be on payroll. Because he does go to the warehouse almost every single Saturday for a few hours. You can put your kids on payroll. I think it's $12,000. They don't pay income tax on that. It lowers your income tax liability. And what we're going to take with that $12,000 is immediately put it in a Roth IRA. So not only are we going to save our money, save ourselves money in taxes, Manny's money is non-taxable because it's his age and the level of income that it is, but we're also going to help him earn interest on it by putting it in a Roth IRA for him. That's another way. Shannon, I know you have children that are of working age. You need to find them jobs.
And that's what the accountant that we talked to
Yeah.
this year has suggested. So that's something he said. He was like, once we get through this tax date, let me have a couple weeks and I'll come back to you and we'll figure out a plan. So,
yeah, that's something. You know, you have 2, 3, 4 kids. That's, you know, $30,000-$40,000 that you can save yourself every year, but also help your children grow wealth too.
yes, that's great. I had no idea about any of these ideas. So
Yeah, it's amazing.
It is.
Another thing that we do is what's called a SEP account. And essentially a SEP account is a self-employment 401k. But there are some tax advantages to that too. We put it in non-taxable. There's only a certain amount of money you can do that every year. So hopefully at the point in time that we're going to need it in the future, we're not going to be at a 40% tax bracket and you take it out at the lower tax bracket. That's one thing that you can do too, but you can only, there's a limited amount you can put in that every year. So that would be something else that I'd encourage you to do. We use Rick Fisher with Fisher Wealth Management. He's great to work with if you're looking for anybody, but we have everything set up through him. We also, other things that can save yourself money is setting yourself up, your children up. What are the educational accounts, Mary Carol?
NC 529.
Yeah, NC 529. We have both of our kids set up on that, and you're allowed to each put in a maximum amount every year as well. That's another way that we save some tax money. We try to look at every way possible. And we realize, you know, we're in real estate. Why are we not investing in real estate at a higher level? Because it can definitely save you a lot of tax money. So that was something we started to implement a few years ago too.
Did you say a STEP account? Because I believe I had one of my
STEP
sons.
account, SEP.
Oh, SCP. Okay.
Yep.
Maybe.
Yep.
I'll
Yeah, I
have to
would
look
get that set up.
Okay.
And at the end of every year, I just put, it's like $18,950 that you can put into it. But as you grow your business, you can also offer that to your employees too. And there's tax advantages to that as well. But also, you know, it's a good thing to do for your employees to help them build their retirement up as well. Those are definitely small monumental things that you can do that will save you thousands of dollars. Setting up your SEP account, setting up yourself as an S Corp, writing off your car and depreciating it, do the accelerated depreciation on an annual basis, putting your kids on payroll. Those are like the top 4 things that will save you tens of thousands of dollars in taxes. Anybody else have any little tips they want to share? I wanted to get your guys' feedback on the upcoming trainings we have. Here's the ones that we have slated out, but this doesn't mean we have to follow this schedule. I kind of wanted to let you guys kind of mastermind of what do you feel like you need next. So we have how to find buyers, how to find sellers, buyer consultation, seller consultation. Anybody partial to any one of those? Anybody struggling with anything right now that they would love to mastermind around? Go ahead, Sonia.
Oh, the sellers.
The sellers. How to find sellers.
Yeah. I'm very confident with buyers, but sellers.
Okay.
Yeah.
What's your business look like the last 12 months, sellers versus buyers?
We've only sold 2, but pretty sure we had a total when we capped of like 16 or so
16
sold
buyers
altogether,
and 2.
like 16 total transactions.
Okay. What was the
And
ratio
that was
of
last
buyers?
month.
Okay. What was your ratio of buyers to sellers?
Well, we only had 2 sellers, so
Of the
probably
16.
98%. Yeah,
Of the
98%
16. Okay.
buyers.
So you had 14 buyers and 2 sellers. Yep. And one of Gabby just said, I'm just starting a business to build a business. Yep. Gabby, I'm gonna Carmen, sorry. Gabby, you gotta change your name on there. Carmen. Gabby is Carmen.
See, my problem with
Okay.
sellers is
Carmen. Go ahead, Sonia.
the 2 we did sell, we knew them personally.
Yeah.
So it's the reaching out to the strangers, finding sellers that
Yep. That's the
I'm
hard.
not great with.
Yep. And we'll talk about that. How do we organically find our sellers? Carmen, I'm going to Mary, your comment's funny. Yes, you probably should put your husband on payroll. Carmen, I'm gonna have Mary Carol share our YouTube link because we have several videos on there that talk about like how to build a database that are really more like foundational things you need to do first to truly like get yourself going. So all of these recordings and any recording that we've ever done, we do have a YouTube channel now if you guys want to go back and watch any of those. Because there's lots of foundational things. And what we've tried to do is like start at the foundation and then build upon it, but then also listen to what everybody's coming on here and saying, like, what are the issues we're facing right now so that we're pouring value into you. Sellers are always a struggle until it's a buyer's market. So it's honestly, Shannon, I can email it to you. I'll email you the expense template. So honestly, sellers are something that we have to focus on every single day of our life. We know that to build a strong, predictable business, you have to lead with at least 50% of your business being listings. And then once you do so, the buyers are going to show up organically, but you're going to have a predictable, stable business for years to come. So it's something we totally highly focus on at a very, very high level. If you guys will drop us your emails in the chat, we'll make sure to we'll send you like a link to the YouTube and then the expense report as well. So sellers are something that we endlessly lead generate for in many, many ways. And it's not something that happened overnight. I mean, I was very buyer heavy for the first probably 5 or 6 years of the business. Your sellers eventually start to become your past buyers. And that's when you start to see your business grow, but there's other ways to find sellers too, which we'll chat about. Okay, sounds good. I wanted to make sure that everybody was invited or got your invitation in the mail for our big mastermind next Wednesday at the Alamance Country Club. It's from 8:30 to 11. We're going to be having some agent panels talking about sellers, talking about buyers, but then opening it up and doing like an open forum mastermind at the end. So we'd love to have you all there. Check your email, please RSVP if you haven't done so already, but we definitely see so much value in those. These small little ones that we do every Thursday are usually about 30 minutes. They're on one topic. They're quick. Hopefully super value added, just to pour into you guys. So thank you for coming today. Anybody want to share any ahas or a takeaway they're going to go do from today? And you can say it out loud or put it in the chat.
Thank you so much for teaching this. I'm
Yeah.
definitely gonna look into my
Absolutely.
taxes more and work on my expenses part of my business.
Yeah. It's something you don't have to pay attention to till it's a problem. And then it's like, why did I not do
Exactly.
this sooner?
That's exactly right. I'm like, why didn't I create an LLC in year one?
Yeah.
I'm thinking.
Yep.
Didn't realize any of it until I get to the third, fourth year.
Yeah.
Last year was my best year I'd had, and then this year started off really slow. So it's just been, I'm learning the ebbs and flows for sure.
Yeah, it is. Awesome, Mary. I'm glad. Are you liking Brad? Brad is on speed dial. I talked to Brad's my accountant who I refer everybody to, but I talk to him literally once a week. I would say definitely get an accountant who gives you advice. That would be my number one recommendation.
Who is it, Brad? Who?
Brad Whitley. I'll share his information with you. He's out of Greensboro. He is fabulous. He's always super, super helpful. There's definitely tax accountants that'll give you a little bit of strategy. Brad gives you a little bit of strategy, but there's also like tax strategists too that are the next level. But Brad does tell us, like, sometimes after the mistakes happen, but sometimes before, like, you should have done this differently, or you should do this differently going forward. So I try to be proactive, and before I do any type of big real estate transaction, buy a car, hire a person, I ask him, like, are we really ready to do this? Or should we do this? Or how should we do it? How do we set up this new business? And he's always super available and super helpful to tell me yes, no, it's not going to help you tax wise. Or if you need to spend the money and have the money and you need it for your business, spend it. But if you don't really need it for your business and you just spend the money, don't do it. So he's like my yes, no person.
You can also do your payroll through them.
Yeah. Which is nice. Alrighty, well, I appreciate everybody being on today. We'll skip next week just because we have our big mastermind next Wednesday, but then we'll be back on the following week. So we won't be on next week. We'll be on the following week, Thursdays, 10 a.m. We'd love to see you guys at our mastermind next Wednesday, though. It'll be fire. So thank you guys. Have a fabulous day.
Thank you.
Yes, I appreciate you guys.